What's up, guys? It's May 8th, 2025. Really cool day in the markets. The overnight session had a huge rally, and then we had a wedge bottom and rallied again. Becoming climactic. Keep in mind that on the daily time frame, we are trending. We've had three legs, so that's trading range behavior. Want to give a quick shout out, as always, to all the subscribers and members. We have new people joining daily. There's people joining the Discords and asking great questions and contributing, and everyone's growing together. So I appreciate you guys. If you want to join the Discord, the link's in the comment. If you want to join the membership, hit join next to price action breakdowns, and we'll see you there. This week I'm going to be dropping a video on the market cycle. Right now, all the videos are more just overviews, and then as I get through the overview and the basics, I can get into the nitty gritty, because the market cycle is really important, and I just can't jump into it. I do talk about the market cycle every single day on the daily breakdown. So if you don't want to join the membership, you don't have to. It's just a little bit more in depth, but let's get into it, man. So like I said, we're in the third leg on the daily chart. That favors trading range price action. Look at today. Big up, big down, trading range price action. Been saying for a while that when we have a trading range, so whenever there's a leg down, so there's a leg down here, the pullbacks become targets for the bulls when the market starts to rally. So what do I mean by this? Let's just talk about it. Okay. Trading range, it breaks out like one, or let's restart the leg count. Like one, pullback like two, pullback like three, pullback like four. So there's a pullback here, there's a pullback here, and there's a leg three pullback here. That's kind of hard to track. Let me draw the lines. And I'm talking from a fractal perspective, so we can't necessarily see it on the daily chart. There's a pullback, shallow, deep pullback. Then the fourth leg down, which actually bears do not get a new low, so that's bad for the bears, good for the bulls. So see this this pullback, that's a bull target. This pullback's a bull target, this pullback's a bull target. In this situation, all these targets were met with one bar here. And that happens. And then we pulled back. The bears got three legs down, leg one, pull back leg two, pull back leg three into support. And now here's a target for the bulls, here's a target for the bulls, here's a target for the bulls, here's a target for the bulls. And the reason those are targets is because these pullbacks have trap traders. There's bulls that bought here, trap. There's bulls that bought here, trap. Well, these guys they were able to hit out when this bar happened, but there's trap bulls right here that bought that high tick, and they're going to buy lower, and they're going to buy more, and then they're going to make money on their second trade, and they're going to break even on their first trade. And look, we're starting to travel up to the swing high. We're starting to find more sellers. This is just trading range price action. Bulls had there's a couple ways to count this leg. Leg one, pull back leg two, pull back leg three. I've been counting it leg one, pull back leg two, pull back leg three, which happened today, which was a really nice rally. And when we have really nice rallies and really good sell-offs, that's more trading range behavior. This is a buy vacuum on a higher time frame. This is a sell vacuum on a higher time frame. Vacuums are trading range behavior. When we have buy vacuums like 27, that's a trading range thing. Let's say 27 started the breakout. Okay, like 20 was a good breakout, and it had a gap. It sucks that 19 was a bear bar, but nonetheless, three bars that create a gap right around this swing here. So there's trap limit order traders. Bears are going to start buying back shorts, and bulls are going to buy the breakout, causing price to move in one direction. In this case, it was the bull side. I try and talk about the same things every day because that's how we do it. I'm not the market cycle is a filter, leg count is a filter, and then as the trader develops, you can start to get more nuanced and little things here and there. So let's talk about it. There was a question in the Discord today talking about trades past bar 27, 28. So I will be harping on that a little bit. Big gap up. We just saw that rally. Bar one, bad follow through. Bear bar closing last low, but it has more tail. So that just means there's buyers within this bar. Same situation for bar two, has a tail and then sells off. So there's a leg one, leg two. Leg one, leg two from a fractal perspective. And then from the 5-minute chart, we have a leg one, pull back leg two, pull back leg three. Bar three, it's a bull bar, and some bulls will buy this hoping for leg one, pull back leg two. Instead, they get trapped with bar four, bear bar closing on slow. This is different from bars 1 and 2 because there is tails here, so we know there's bulls buying. They're trying to get the market to rally. But then bar 4 is going to trap those bulls. There's this very small tick on bar 4. I can zoom in real quick. It's a very small tick, so a few bulls bought it, but the majority of bulls are either hitting out of position or they're in a losing position. Just how I mentioned on the daily chart, how bulls are going to get trapped here, they're going to buy more and get out. Look what happened. Bulls got trapped here, big bear bar, they buy more, and they get out at break even from the first target. They make money on their second target. Bar 5 is an inside bar. Bar 6 rallies, but sells off, bad follow through, and then we see bad follow through again. 7, there's a wedge top on a smaller time frame. Leg 1, pull back leg 2, pull back leg 3. Wedge top. How can I say this? I don't want to say a wedge top usually gets a bearish breakout, but a wedge top does mean bulls have tried 3 times in one direction, and usually the market will try the other way. And we can see that happen with bar 8, bear bar closing on its low. Bar 9, bear bar sells off into the EMA, but then bounces. So there are buyers at the EMA, and we can see that with bar 10, bull bar closing on its high, and then we see a good rally on 11, but unfortunately, bulls started taking profits, so they weren't really inclined to hold at new highs. Well, at not new highs, but they weren't inclined to hold at the high of the bar. Instead, they scalped out, and they caused a tail on bar 11. This tail is not just bulls scalping out of a winning position. This is also a tail caused by bear selling. Bears have limit orders above the last strong bar, hoping for a sell-off. So there's bulls and bears selling that causes tail. But the important thing is there's not a lot of conviction right now for the bulls. Bar 12, not a traditional inside bar. We went 1 tick higher. Bull body closing on its high, but not far past 11. So that's a good bull individually. It's a good candle. With market context, it's not the best candle because it's not really breaking out of anything. 13, rallies and sells off. Same situation. There's bulls are taking profits and bears are selling the swings right around here. We get a few legs down. Bar 13, was that 13? Excuse me, bar 14, bear bar closing on its low. 15, I wasn't in a trade here. Oh yeah, my first trade was right around here. But I actually thought 15 was it's an alright buy. It's not the best buy because it has a bear bar right next to it. But then we see 16, and I think it's safe to get out longs because now 15 could just be a pullback from the 14 sell-off right here. So like 1 pullback, 2 is what I'm trying to say. Like 1 pullback, leg 2. Excuse me. Yeah, I got confused right there. Here we go. Leg 1, pullback, leg 2. Yeah, so 14 is a lot of bear bars closing on their low on a smaller time frame. On the 5-minute, it's 1 chart. Guys, you know I have the charts open next to me all the time. I like to trade a system. So I'm going to place a trade and still talk about this. I want you guys to start seeing what I'm doing just because I think there's a lot of funny business going around on YouTube. Have you guys seen, I'm not going to name any names, but there's one trader he's not an Albrooks trader. This is just like a social media trader. And he was editing all his like P&L statements and whatnot, and he got caught because there was a bad edit. That's scary, you know. I think sometimes people never even get to really trade because of all the funniness on social media. 10 looks alarming, but what I do is I trade $100 to $200 worth of risk, and I do like to take the more on the $200 side. So that's what I'm trading. It's not necessarily 10 contracts. I keep my risk $100 to $200. I really want this bear bar to close on its low, and then what I'm looking for is like a leg 1, pullback leg 2. If this bear bar starts to rally, it's not the best situation because we could be in a channel right here, but we'll see. So let's get back to the breakdown. Let me know if you guys like this or if it's kind of distracting. You guys are here just for the breakdown because it's something new I started doing, but because a lot of people in Discord are asking me, what am I doing? What am I doing? How am I trading? What's my P&L looking like? And that's fair. You know, you guys are following me, so you should at least know what I'm doing while it's live. I do like to trade the overnight session. I have a part-time job, so I don't miss most of the day. I only miss 2 hours of the day, or the training day, the last 2 hours, but I like to trade, and I trade a system. So if the system prints and the context makes sense, I'm going to take the trade. So back to what we're talking about. I just zoomed past this. So this is a bear bar closing on its low here. Here are the many bear bars closing on its low, and now we're looking So this is that bear bar closing on its low, and then right here is that doji. I think it was bar 15 where I was like, oh, this is a nice buy. But then we see on this chart, bar 84 selling off. What was it? Bar 15. Yeah, so when I thought like, oh, 15 is a nice buy, but then we see 16 sell off, and that's that price action we saw in the 1 minute chart. We see a trend line break here on 17. Trend line break, sells off for 3 more legs down. Leg 1, pull back, leg 2. You could argue that this is one big leg because there's no trend line break. I count 2 types of legs. I count pullback opposite bars as legs, and I count trend line breaks as legs. One's not better than the other. You just kind of learn over time that you just have to be cognizant that this could be a pullback and this is also a pullback. But to keep the leg count in 3s, leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Does that pattern look familiar? Daily chart. Remember price action fractal. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, higher low. Traps bears and then it rallies. Look. You guys saw it again. Leg 1, pullback. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, higher low, traps bears. Gap up, bulls still have momentum. 18 touches bar 81 here, so there are buyers waiting to buy the range lows. Then it rallies. Big bar 20. We talked about that for a moment, how it traps bears at 21. Now we have gaps. Again, gaps are a sign that the market is trying to go in one direction. If gaps stay open, that's good. If gaps close, that's trading range behavior. One's not better than the other. It's just about reading context. That's what's the most important, is that we can read the context. So we have many bull bars in a row. If you guys watch the gaps video in the members section, I talk about how a big gap at the end of a trend could be an exhaustion. Look what happened. Big gap at the end of the trend. The momentum took 3 more legs to die down. So big gap, just some momentum left. Pull back, leg 1, pull back, leg 2, pull back, leg 3. Sideways price action for the rest of the day. So we see a gap on bar 20. It's trapping limit order bears. That's good. It's good for the bulls, bad for the bears. Then we see good follow through 21. Again, we're in a bull regime where we have a gap up. And if you're looking for a sell-off, this is not normal for a sell-off. These 3 bars are not normal. These are bullish microchannels and what the bears want to be a complete reversal. There's not really bull microchannels in bear trends. So keep that in mind. The market is what the heck? The market is selling off. So this is something I'd like to see this bar close on its low, and then I know there's trap bulls there. Then it comes up, grabs my order for that leg 2 high probable trade. 23. 3 bull bars in a row. That's a bull microchannel. Good context, but the bars are shrinking. And then we see a breakout. Excuse me, did I say 23? Bar 22. 3 bull bars in a row, but the bars are shrinking. And then we see a breakout 23. The swing high is right around here. And look where this gap's placed at. It's placed at support, or in this case, it's placed at resistance. So it's trapping the bears that are selling right here. Bears are getting trapped all the way here. They're being forced to buy back shorts because the market behavior is. This is really important to understand. When bears are trapped and you hit close position, when those bears are closing their position, they're buying back shorts. So they're adding to the bull pressure. They're buying the market back. Although we just press close position, the market behavior is buying back shorts. Okay, and same thing for the bulls. When you close a losing position for the bull side, you're selling out of things, so you're adding to the selling pressure. That's really important to just. I don't do this, but like, let's say you had and check with your broker. I don't know if all brokers are the same. Let's say I was short, and I was short here, and the market goes against me. I could close my position, or I could hit buy the market, and it would also close my position because they do the same thing, but traders just get used to closing their position. But the function of the close button is to buy back shorts or sell out of a long if you're whatever. So I hope you guys are kind of understanding what I'm getting at. If you're not, please ask me in the comments or the Discord, because it is important for you to understand that when traders are trapped, they're forced to do the opposite thing. Bulls are buying the breakout and bears are buying back shorts. 24 follow through but has a tail, and then we see that first pullback 25. It's a trend line. It's a good pullback. It's not a bear bar, but it does break a trend line. And then we see that right away bulls were making money as soon as they buy the close. 26 bull bar closing on its high. 27 bull bar closing on its high. It's the biggest gap in the trend. I think a pullback's coming soon. exhaustion. These gaps are semi the same. This gap's kind of bigger. This gap's about the same as the first size, but then this gap is noticeably bigger. So be cautious if you're long around here that you might have to sit through a pullback. In this situation, you had a decent amount of time to get out of longs, but sometimes the market will just be a 2-bar reversal. That happened the other day. Look, this is the biggest gap compared to, like, there's a gap from here to here. This gap is almost 2 times the size of that, and it's in its third leg. Now, granted, the context is a little different under the EMA, but what I'm trying to get at is look at 35 and 36, 2-bar reversal, or 3-bar with 33, 34, 35. Okay, so that's what I'm trying to just emphasize. Big gaps equal exhaustion. Not all the time. In this situation, it kept going. Follow through 28, and then we finally get that first bear bar. I deleted that so we can see the tails. Then we finally get that first bear bar, 29 at the tail. But this time, bulls that bought it were underwater, so they're going to buy more when they see 30 and there's a tail there. Then they can get out of break even, creating a double top. But in this case, this leg was strong that there's enough momentum left for it to get its own third leg, its own second leg, leg 1, pull back, leg 2. 33 also breaks the trend line, so you could argue leg 1, pull back, leg 2, pull back, leg 3, with the last leg being climactic. Bad follow through 34. 35 is a bear bar closing on slow. 35 is a bear bar closing around its midpoint, has a tail. 36 is a bear bar closing on slow. This is still a pullback. Bears have tried 3 times. Leg 1, pull back, leg 2, pull back, leg 3, and they're not able to make new lows. Then we have a 1, 2, 3, 4, 5 bar rally. 1, 2, 3, 4, 5, 6, 7, 8, 9. So this breakout's 9 bars, and this rally's 5 bars. And look at the size difference. So that lets you know that, momentum's starting to die. 38, bull bar closing on its high. 39 has a tail, so bulls are buying the pullback, closing on its high, but now there's a tail there. 38 closed on its high. There's a tail here, and now there's a tail on 39. So bulls are buying pullbacks. You guys see that? Tail on 40, bulls are buying pullbacks. Whereas look at like from bar 20. As soon as it closes, bulls buy, closes, bulls buy, close, bulls buy, closes. Here's a pullback on 24, and it ends on the low of 25. They bought it, and then it rallies again. Here, the market had to sell off and then rally, sell off and then rally, sell off and then rally. So that lets you know bulls are buying pullbacks. They're not really buying highs. 42, inside bar. 43, bear bar closing on slow with follow through 45. 43, bear bar closing on slow with follow through 44. 45, 46, bear momentum's dying. This is the first touch of the EMA. Same situation with 15. I actually thought 47 would be a good buy for a test of the highs, but it ended up being a pullback for 3 legs down. Leg 1, pullback, leg 2, pullback, leg 3. I'm going to try and speed this up a little bit because I do got to talk about the trades, and we're pushing 20 minutes. I want to adjust my trade with you guys. The market's selling off, so instead of 208 getting 1R, I'm going to now change it from down there, modify. Don't worry about the risk. I'm going to change it. I'm not taking on 280. I just want you guys to see, but some people are asking me how I'm doing this, and I think it's beneficial. I kind of wish I was able to see someone do this. Okay, so now we'll take 7 contracts because that keeps me under 200. There we go. I like to just keep the same risk, and then I get to just really worry about the setup. And I know where my stop's going. I know where it's just all the same. All I'm doing is reading context and deciding to take the trade. 3 pushes down, bar 54, testing. I'm going to speed this up a little bit here. Bar 54, 55, testing right around the high of bar 20, 26. And then it bounces. So there's still a gap open right around here. And it rallies for 3 legs higher. This is trading range behavior. Definitely hard to trade. That's why the question was asked, I think. Leg 1, pull back, leg 2, pull back, leg 3. There's also a miniature 2 legs, leg 1, pull back, leg 2, pull back, leg 3. Wedge top in a trading range, testing the low of 48. I was short here. I got filled on 63, and I got out right around here. And let me see this. I think I got filled earlier than that. I think I got filled on 62, and then I got out like around 1R. for 48. 2-bar reversal. I was trading on my phone, so it was hard to see all the numbers. 2-bar reversal, 63, 64. 64 is getting follow through with 65, but it has bad follow through because there's a tail. So bulls are trying to buy here. There's a breakout point on 60, but it's a bad breakout point, and the breakout doesn't go far. How do I know it's a breakout point? Well, 61 broke out above it, so I know there's trap bears there. 66, bear bar closing on slow, and then we have a tail of 67. 68, bear bar closing on slow, but now this is many legs down in a trading range. Leg 1, pull back, leg 2, pull back, leg 3, prolong, pull back, leg 1, pull back, leg 2, pull back, leg 3. And then leg 4 for the bears. Rally for the bulls. Trading range. Bulls rallied 69. 70, 71. Big tail. Tagging the high of 48. Or is that tagging the high of? Hold on. Yeah, so we almost rallied right up until 43 is low. There's a very small tick, and then 72 is an inside bar, and then bears get a spillover, sell-off. That's what bears wanted all day. 73, bear bar closing on slow. 74, good follow through, bear bar closing on slow. 75, bear bar closing on slow. Now we have multiple gaps, so we know bulls are trapped because bulls think we're going to get a trading range or a new high for the rest of the day. So they have limit orders right around here, and look where the gaps line up, right where those orders are sitting. So now you know bears are trapping bulls. Same conversation how I had bears are buying back shorts. Bulls are now being forced to sell out of a position. Big gap down. See, guys, remember this gap here? Climactic price action. There's fractally, on a fractal perspective, there's 3 legs down. The starting gap's a little bit bigger. Then these 2 gaps are about the same. And then a big gap on 77. Follow through on 78 and the market goes sideways. So just to read, because I'm going to delete those gaps. You guys have seen it. And there goes my dog barking. I'm going to mute the mic. I think he barks when the construction workers are like leaving. Because it's around the same time every day. So what I'm doing is showing that there's 3 legs down here. Here we are. Leg 1, pull back, leg 2, pull back, leg 3. And look at the gap on the leg 3. It's bigger than any of the starting gaps, remember? So it's climactic. And then we went sideways for the rest of the day. So very interesting stuff. That's why what did I just do? That's why I think that the most important filters are market cycle and leg count, because it's repeatable. The same way I broke this down is the same way I broke this down. So hope you guys are trying to understand why I think it's really important that we focus on just a couple things and get really good at doing a couple things. Let's go over the measured moves real quick. Trading range behavior, it breaks out, gets 1R, and look, when it gets 1R, the market starts to go sideways. The question was, can we talk about trades after 28? So here's 27, here's 28. The reason I think this question was asked is because this specific person trades 50% pullbacks, and it's hard to get in on a trend like this. I'm not going to name any names unless she wants to be named, but yeah, so if you're looking to trade the pullback, you know, you're trapped out. I was trapped out of this entire rally, but the market goes range bound more than it rallies. So we were trapped out the markets for 45 minutes, and then you can start buying pullbacks and whatnot. However, you are trading profitably, don't change anything. So let's just talk about the trades. I want to stay to the bull side because there's bullish momentum. There's a bull channel here. You could fade 29, but then you're risking a collapse because we're far away from the EMA, and there's an exhaustion here. That's an exhaustion. So I'm not that happy to buy 29. Let's say 29 happened around 24. Maybe I'd be happier because we're still close to the EMA and it's a shallow pullback. 29 is not the first reversal because 25 broke the trend line. So 25 is that first reversal if you were looking to buy the close. Scalp out. 27 is climactic. 30, bulls were more willing to buy this, and this is the 50% mark of bar 28. Yeah, so you could buy that and scalp out with the extreme. Then it rallies. Sometimes when there's 2 bars in a row, you could get the 50% level of both bars. I'm talking about 50% levels because this trader trades 50% levels, which is a pretty 50% is the most common pullback. So And I believe she scalps out extremes, but that's for her to say, not me. So I'm not looking to get short on anything, but I did get, I was short around in the morning. I scalped, where was I short? I took a good short and I made money. I wasn't short here because I would have got stopped out. Oh, yeah, I was short here. Look, 1 hour was made super quick and I got filled on, what was that, 17. So I was short sometimes. I took 2 short trades. There's one. Now that I see bears have a micro channel, so even though I don't see bear micro channel, I'm already aware that we're in the third leg when I see 37 through 40. So if you're gonna buy 50% pullback, there's a better chance you get stopped out here than here. Both of these trades are not the best trades because this is climactic and this is also its third leg. So I think this is more 50-50 and this is a losing trade. Now bears have a micro channel in the third leg. There's the first pullback. Let's see where the 50% lines up. Depending on how you, so I think she does 1 bar. So that's kind of hard to catch if you're going to do 1 bar because we're trading the context of 5 bars here. 50% level was rejected on bar 47. And you would get filled to the tick and it sells off, tagging your extreme. Then you have another 2 bars here where I don't think the 50% level was hit. It kind of was. I don't know. It depends if you do 1 tick above below your limit orders. Then we see 54. Again, third leg. It's the biggest bar. It has a bigger gap, I believe. I don't know if it's the biggest gap, but there's a gap here. It's not the best trade to take a 50% level trade because you're in the third leg. If your stop was here, you would get filled 50% here and you get out at break even or you take a loss. Again, not too many trades, you know. Here is a 50%, you get stopped out, and then you get the bear 50%, you get stopped out. From the bull's perspective on just what we're looking at, you could see the swing low of 53, and then the market comes back 69, and you scalp out here. I actually took 1 trade. I don't think I got stopped out. Oh, I might have taken this trade here. It came very close to my order and didn't stop me. Oh, you know what? I traded the mini NASDAQ. There we go. That looks a little bit better. Yeah, that's why I didn't get stopped out. I did take that trade. See, I do 1 tick below. So look how close it came, and then I got filled here. Pretty similar price action, but I just like trading NASDAQ. So for me, that trade worked on the NASDAQ. On this trade, if I took bar 60, I would have got stopped out. That's why I was looking. I was like, I remember it being bar 60, but I would have got stopped out. You guys just saw it worked on NASDAQ. So there is that trade there. And then here, I'm looking for a breakout here, but you get stopped out. So yeah, this is tough after bar 28. This is overall just a hard day to trade because the shorts have deep pullbacks. The rally traps traders out unless they're willing to buy high, which most of the time that would result in a loss. And then by the time you want to get short, you're already in the third leg and it's reversing. It's becoming a tight trading range, and then out of nowhere we get a bear breakout. So trading ranges are limit order markets. Here's a stop order market, but stop order markets are brief. The trades I took today. Let me see. I have this trade open, so I don't want to mess it up. But give me 2 seconds here. If I could do this, I did it earlier. Execution. Okay. Cool. Yeah. Here are the trades I took. That's the overnight session. Don't worry about that. Took this trade. Filled. Exited. I took this trade. Took a loss right there. This is that trade I was talking about where I got filled right around here. Then I did catch this short. That was a nice one. Oh, I forgot about that one. Oh yeah, right here. I took it again with a bar 48 short, filled. I don't know why there's 2 arrows there. I think 2 arrows happen when like the order, it's 1 order, but sometimes there's 2 arrows, so that's weird. Like right here, 2 arrows, but that's 1 order. And then, oh yeah, okay, so I took a small loss here. I tried to take bar 53 to get short. I got filled and I exited on this bar. And then 60 got 1R. So there's that bar 60 I was talking about, filled and exited. And then what trade did I take here? I may have just bought bar 60. 69. I got filled here, I bought here, and I exited here. So there's that trade. And now I'm just waiting. I took one trade in the overnight session. It was a loss, but I took a smaller contract because it just looks sketchy to me. Talk about that real quick. I'm not sure why it's doing two things like that. So I saw bar 196, filled here, exited here, and now I'm just waiting to get filled again on bar 209. That lines up for 1R because that bears that short here made 1R very quickly. And yeah, that's it, guys. So please, hit the follow button if you learned something. Share the show. Don't be a hoe. You want more in-depth videos about the market and the market cycle and what we're doing on how we're actually finding these trades in context. Join the members channel. Hit me up for a link on that, or join the Discord below and talk to the traders. So yeah, you guys have a good one. Thank you for your time. I will talk to you guys tomorrow. Hope you guys have a good one. I'm about to get filled. So yeah, I'll talk to you guys later. Bye.